Welcome to Eye U.S. stock. We watch markets with calm focus and sharp instincts. It's Tuesday, June 2nd, 2026, and this was one of those days where the index looks calm, but the tape? It feels violent. Megacap tech just ripped the tape apart. Apple surged while Microsoft and Google cratered, and somehow, the broader market still ground higher into fresh highs. The vibe? Risk on, but with real rotational stress. Leadership changed hands today. It wasn't a full de-risk. Looking at the S&P 500 heat map, it was a totally bifurcated board. Big, obvious red blocks in megacap software and internet. Microsoft, Alphabet, Amazon, fighting against bright green and Apple. But here's the key read. Underneath those megacap reds, the map had a lot more green than you'd think. Industrials, financials, utilities, and parts of the semiconductor and networking chain. They were lit up. That's the masking effect. The index just feels heavier than the underlying breadth. So, where did the money go? It rotated sharply out of crowded, high-multiple AI platforms and megacap software. It went to two places. One, AI build-out plumbing. We're talking networking, optics, semi-cap equipment, places where spending actually shows up as orders. And two, cyclical and value pockets. Industrials, banks, and utilities acting as steady, yield defensives. The clean contrast today? Software leadership broke down, while infrastructure and balance sheet beneficiaries took the baton. Here's the unresolved tension behind the tape. The market is still buying the AI future, but it's getting a lot less forgiving about the cost of it. Today set up a courtroom argument. AI optimism on one side, and Capex, dilution, and financing overhang on the other. The indices didn't break, which matters, but the leadership message did. Positioning is rotating, not exiting risk. Now we look at the stocks to answer the real question, is this just a one-day decrowding or the start of a whole new leadership regime? We didn't get a clean chatter list today, but man, the tape itself was noisy. Traders were watching closely. Were parts of the AI connectivity move just momentum and headlines? Meanwhile, the software liquidation felt heavy, concentrated, and emotional. Separately, crypto was weaker, even as equities held up. It's something people notice, even if it didn't drive the index. A few secondary AI names? Quiet. Consolidating. So they stay on watch, keeping out of the headline bucket for now. Alphabet was an absolute centerpiece today. The stock fell nearly 4%, down to around 361 after announcing plans to raise $80 billion via equity offerings, all to fund AI investments. That put dilution and financing overhang fears front and center. It became a live stress test. How do markets price the AI Capex at any cost narrative, especially when investors are already hypersensitive to valuations? Microsoft was the other big weight, dropping over 4% to roughly 441. The analysis called it aggressive distribution across the software and infrastructure complex. And look, this mattered way beyond one ticker. It shaped the entire session's risk psychology. When a general like Microsoft gets hit, the whole software factor feels it. The big question now, does Microsoft stabilize? Because that's usually what decides if the rest of software gets any relief. But while those mega caps were bleeding, Apple was the counterweight, gaining almost 3% to 315. The analysis frames Apple as a defensive growth safe harbor inside tech right now. And the practical impact was simple. It kept the S&P and NASDAQ from reflecting the absolute bloodbath happening in the other mega caps. HPE was the hard data moment for the AI build-out crowd today. The stock surged nearly 20% on a massive earnings-driven move. The notes point to an AI networking revenue jump, up an incredible 148% year-over-year. It perfectly feeds the narrative that AI infrastructure spending is finally translating into real revenue. That is exactly the kind of proof point that keeps money pouring into the picks and shovels side of AI. Caterpillar put the entire rotation into one clean chart, jumping over 5%. It was totally emblematic of the industrial cyclical leadership we're seeing, and it explains exactly why the Dow outperformed. Think about it. When you see heavy machinery catch a bid while software gets decrowded, that's the market screaming that it wants less duration and a lot more tangible cyclicality. Broadcom was another high-signal infrastructure tell, rising almost 5%, closing near 481. The analysis frames this as the market heavily leaning into AI infrastructure and networking semis. These are the names viewed as direct beneficiaries of build-out Capex, happening at the exact same time the market was actively punishing megacap software. Looking at the near-term setup? It's a rotation watch, first and foremost. After today's concentrated sell-off, traders are hunting for follow-through or a potential snapback in megacap software, especially Microsoft and Alphabet. Second, the market is still digesting what Alphabet's $80 billion equity offering means for AI spending across its peers. And calendar-wise, brace for next week's inflation cluster. Wednesday, June 10th is CPI, Thursday brings PPI and jobless claims, and Friday, University of Michigan sentiment. Those are your next big macro markers on the runway. Bottom line. The S&P closed at a record, but the Nasdaq stalled. And that divergence? That is the whole story. Today didn't look like investors fleeing risk. It looked like leadership being reassigned, and reassigned fast. Heading into the next session, the tell is simple. Do megacap software names stabilize? And does the infrastructure and cyclical bid keep broadening out? If you want the next tape read when those answers drop, follow along, and we'll see you next session. Thank you for watching Eye U.S. stock. Stay curious, stay calm, and we'll see you next time.